Hello, everybody. I'm just seeing the numbers come up, and I just want to take a moment to welcome everyone and thank you for joining us this afternoon or this evening or this morning, wherever you are in the world. My name is Erin Hallett, and I'm Head of Alumni Relations at the Business School. I think many of you today will know that we were actually meant to be hosting this event in Toronto, Boston, and New York City this week. And we were so looking forward to being with our alumni in those cities. Of course, the next best thing is being with you remotely, and we have a wonderful representation of our Imperial College London and Business School alumni from around the world. We have alumni joining us from China, Ghana, Mexico, India, Guatemala, Qatar, Singapore, Jordan, France, Iceland, the United States, Canada, and of course the UK. It's always so lovely to be together, and I hope wherever you are in the world that you and your loved ones are keeping safe and well. Before I introduce Dean Francisco Veloso from the Business School, I just want to go over the format for the event. Dean Veloso will say a few words and introduce Professors David Miles and Nelson Phillips. They will have a discussion, and then we'll have about 35 minutes to take your questions. Please do type your questions in the Q&A box, and feel free to also engage with the chat. It's great to see some of you letting us know where you're from, so thank you. I also want to remind you that our event is being recorded, and you're welcome to ask your questions anonymously. Lastly, I want to personally thank overwhelming support and kindness during this time. I know you have volunteered to support our students, helped our recruitment and careers teams, and engaged with Plexus and our online events. Thank you. Imperial College London and the Business School are here for you. We are committed to strengthening our alumni community, and more than ever right now. Whether this is through networking opportunities or helping you connect with former classmates, bringing you virtual events on relevant topics, and supporting your professional development. Please don't hesitate to reach out to our teams with any questions or suggestions. You will see our email address posted in the chat throughout the event. And now it's my great pleasure to welcome Dean Francisco Veloso.
Thank you very much, Erin, and thank you to you and the team for organizing. As Erin already mentioned, we're really very much delighted to be connecting with you today. You know, it would be even better if we could have done it personally, but we all know all too well what's going on around the world and why we're doing this remotely. And actually, that's where I wanted to start, because we know that besides the difficulty of being together, one of the most significant issues, of course, is the fact that a lot of families, people are being directly affected by this terrible virus, and that can be, of course, in health, but also distress, pressure, loss of income, job, and even, of course, debts. And so, words of sympathy to those that have been more directly affected by this terrible virus, and more general to the community for the resilience and the involvement that you've had on these many months, and the support that you've given to the business school throughout this period. Let me just take the opportunity, besides welcoming you, to just tell you a little bit about what's happening at the school. And basically on March 13th, we decided to move everything remotely to teaching, assessments, and involvement, the entire work, which is something that you're not unfamiliar for many things that happened in universities around the world. And this was very challenging, but it ended up being quite a smooth transition. This was, thank you to the faculty, the professional staff, and the students and their resilience, and also the involvement of alumni in many instances that I'll mention in a second. It was an amazing process by which the collaboration across the school, including the entire community, really made a huge difference. And that meant that hundreds of modules and thousands of exams were moved digitally. Of course, we already had very significant experience doing the work, given the work that we do through our EdTech team, and many of our faculty and our staff are already familiar, but we went basically to do everything all together across all areas. And I think that went quite well. with a lot of work, but with remarkable feedback that we've been getting from our entire community. And we kind of had a three-stage process. I mean, the first stage was just stabilization. So what that means is that we were making this transition very smooth, very quickly. So we want to make sure that things were working properly, that we were able to assure the learning outcomes of the classes and the work that we were doing. But then throughout the summer, we were also in a second stage, which is enhancing things, trying to make sure that based on the learnings that we have and the history that we have doing things digitally, that we can do things better, as we iterate over every course and every program or every exam. And then into the fall, really also starting to innovate. And this was, of course, starting with focus on the students and making sure that the students, were very much both safe and able to continue their learning journey and their student experience. But it was also about engaging with our own staff. How do you make sure that the team keeps working in a remote environment? How do you make sure that everybody is protected and safe, while at the same time assuring that our job can continue in a really strong way? But also in terms of external engagement, working with our community and certainly our alumni. And our alumni, yourselves have been very supportive throughout all this period in many different instances. One that I think is worthwhile to note is the fact that, for example, when many of our students were left without summer projects because of moving online, we reached out to our alumni community asking if it would be possible to support some digital projects, some virtual projects. And the response was overwhelming, and we were able to source many fantastic projects that were done all virtually, and the alumni community played a really important role in sourcing many of those, and we're very grateful to the community for these contributions. Since then, and especially throughout the summer, we've been very much preparing for the new term. So that means working with our applicants to make sure that we understood their concerns, their aspirations, and that we could organize our programs to really deliver a good learning experience throughout what's coming in the fall, making sure that we had all our health and safety protocols, tools, and solutions prepared for them to arrive. And then finally, really innovating. And so we are doing very much a hybrid format. We retrofitted several of our lecture theaters to be able to have teaching both in the classroom and as well as connecting to our students remotely in what we characterize as a hybrid multimodal delivery system. And I think that based on this experience, we'll be very much at the frontier of what it is to deliver education, not just virtually, but also in a combination of leveraging the digital and the physical presence. And so it's been a challenging few months to all of us, certainly to all of you as well. But I think that we feel that given the challenges that we were all dealt, that the school has reacted quite well, and that we're still, of course, facing many challenges into the future, but I think we're well equipped, well prepared to work with the students that are arriving on campus and to create an environment that's both very strong from the point of view of the learning and student experience, while at the same time assuring that the health and safety of our faculty, our staff, and our students is very much guaranteed. And so, and the last word in that regard is just to share with all of you how proud I and the entire school are of the work that everybody's doing in the school, but not just in the school, across college. Of course, college, especially on the medical side, has been very much at the forefront of the response to the pandemic in terms of the epidemiological studies, in terms of what the medical staff is doing on the front line, testing, vaccination. All of that has been very much an important part of what we've been trying to do. And even our own faculty have been very much involved in providing responses and helping to interpret what all this that's happening with the virus means for the economy, for firms, for people, for businesses, for households. And this is something that's quite important. We are hoping to get back to you very soon as we can, to connect with you personally. But if not, we will continue to do this virtually. And besides myself and Erin, Shona Aitken, that many of you know, is our key person to contact in North America. And so please do get in touch with her if you want to connect a little bit more and understand more of what we're doing. And this is very much what I wanted to share with you in terms of an update in the business school and where we are. And so off to the main event for the afternoon. And this is a conversation on Britain's journey through troubled waters, through COVID-19 and Brexit. And I want to introduce you David Miles and Nelson Phillips, who will be doing the conference and the webinar this afternoon. So David Miles is a professor of financial economics at Imperial College Business School. His research focuses on policy issues connected to financial stability, housing markets, and monetary policy. And besides his academic work, he was also a member of the Monetary Policy Committee of the Bank of England for several years, where he blended not only the academic work that he did, but also in a very practical policy way. And besides that, he also has an important experience working in the banking sector. So, a wonderful person to help us make sense of, how all these elements play out. And more recently, David has been very much specifically also researching the impacts of COVID on the economy and what we can do to respond to that. And also hosting the conference is going to be Nelson Phillips, who's our Associate Dean for External Relations and also the Abu Dhabi Chamber in Innovation and Strategy. Nelson is a leading academic in the areas of entrepreneurship, tech strategy, and innovation and work theory. Some of the areas where he's very much leading the way in terms of our understanding of these issues. And there's been also a lot of innovation happening around all these challenges that we're facing. So with this, thank you very much for joining us. Thank you for the team to organize this event, and to David and Nelson in particular for leading the way. And now handing it over to Nelson, who's going to be putting forward the event. Thank you very much, and look forward to see the rest of the event. Thank you.
Thank you very much, Francisco. So welcome everybody. It's fantastic. I see the number keeps going up, the number of participants, and people are still joining us, which is great. So thank you for taking the time. As Aaron said, we were really looking forward to coming, David and I looking forward to coming to North America for a visit in March, but of course that didn't work out. So we're really lovely that we can at least connect this way and have a bit of a conversation. Of course, when we were coming to, as Francisco mentioned, when we were first planning to come to North America, we were going to talk about Brexit, but the whole COVID impact of COVID, of course, has become all mixed up into that. So the topic today will be those two things: the upcoming Brexit things that are happening, what's going to happen, what might happen, but also mixed into that, what's happening with COVID, what's the effect of COVID on the UK economy, what's happening. So David will be making some initial comments on that and kind of going over his thoughts on that. And during that time, I want to really encourage all of you to post questions, as Aaron said. So there's questions that you can type in your questions at any time. As soon as they come to you, feel free, and I'll try to summarize and put them together, and David and I will do our best to answer those. You can also like each other's questions. So if someone that has a question, you think, oh, that's a great question, like it, and we can see which of the questions get the most likes, and we'll make sure we get to those ones. You can just to get you warmed up, to get you started, it'd be great if you could just type in where you are, your name, where you are. I see some of you've already done that, but also the weather, because the weather in the UK has turned back to UK weather. We're all sitting in a monsoon, and it's cold. It's like 18 degrees. So you can make us feel bad if you're somewhere that's really warm and nice, and then we'll wish we were with you instead of just talking to you this way. So type it into the chat. That'd be great, just to get you warmed up. Great, thank you. Oh yeah, hot and sunny Houston, there we go. London, okay, you're the same as me. Oh, you're in Kelowna. Okay, I'm from Canada originally. Lovely to see a Canadian representation. Yeah, Montreal, hot and sunny, very good. So there's lots of you had better weather than us, although that's not a very difficult competition to win as we move into the fall in the UK. I've got New York there, great, fantastic. Okay, so you just keep sharing things in the chat and make sure you ask your questions. I'm going to hand it over now to David to go over his initial thoughts on this really important topic, and then, as I said, at the end we'll have 30 minutes or so to 40 minutes to have a conversation using your questions. So put your questions in anytime. Over to you, David.
Thank you, Nelson. Thank you very much. And Good evening, good afternoon, good morning, depending on where you are in the world. COVID and Brexit. We've hit the jackpot in terms of gloomy subjects to be talking about. I'm amazed that almost 90 of you thought it was worthwhile to listen to us talking about such a depressing thing. Although I will have some depressing things to say. I might offer a few thoughts that are slightly more positive as well, which is a rare thing coming from an economist. But there you are. So what I'm going to do is, first of all, be pretty brief, offer some thoughts on where we are in the UK and where we might be going through these difficult times, more as a way of prompting a discussion rather than me giving a lecture. This is absolutely not going to be a lecture. It's going to be somewhat speculative and highly opinionated and somewhat controversial in places. But if you can't be opinionated and controversial about subjects like this, you might as well put yourself to sleep. So there we go. So let me try and draw some parallels between these two events that the UK is going through. COVID-19, of course, in common with pretty much every country in the world, and then something rather more parochial and specific, Brexit. Can we maybe have a look at the next slide at this point? And the first thing I want to say about this is that I think the economic impact of COVID, certainly over the near term, that is over the next 2, 3, 4 years, is likely to be massively larger than whatever the impact of Brexit is. And unlike Brexit, where some people see some potential upsides, some positives, I don't think anybody in their right mind sees any particular upsides in COVID. So the impact of COVID is unambiguously negative and very large. Brexit, I would argue, is somewhat ambiguous, probably on balance, somewhat negative, but in terms of magnitudes, I think a significantly less important economic and social and political event than is the virus. In terms of what you might call the narrowly defined short-term economic impact of the virus, it is enormous in the UK, as it is in many countries where there has been more or less a complete economic lockdown until very recently. On optimistic assumptions, the level of GDP in the UK this year, 2020, looks like it might be down 10%, some people think nearer 15%, than in 2019. That's an enormous shock in itself. And it would be relatively optimistic to argue that this is an event that is a big shock in 2020, but we bounce back in 2021. I think there'll be some sort of bounce back, but whether we'll get back to what you might call economic normality early in 2021 looks at the moment like a relatively optimistic assumption. Then there's the longer term impacts, which are very difficult to judge at the moment, but I suspect may turn out to be somewhat significant. They are impact both on the medical situation, on health, as is true in many countries in the UK. Priority was given over recent months to dealing with the virus, understandably, and that meant a lot of underlying conditions, cancer, diabetes, health conditions, have been somewhat neglected, and they may have longer term impacts on mortality in the UK. And there's been enormous disruption to the education of young people. That's very likely to have a longer term economic impact as well. And much of that impact, particularly the disruption to education, but also the kind of jobs that are being lost in the UK, will disproportionately hit the young. So a very big negative economic shock to the UK, and indeed many other countries, disproportionately economically anyway, medically slightly different, but disproportionately economically felt by the young. Brexit is in a different category. Not so obvious it's in the longer term such a negative impact, and not so obvious it's unambiguously negative for the young. If we might move on one slide, please. I want to say something very briefly about the scale of the political and economic reaction to the virus. And again, what I say, I don't think is in any way unique to the UK, but it's certainly extraordinarily significant and important in the UK. The response from the government has been enormous. We've had an economic lockdown. We've had a scale of support to people who have not been able to work in terms of their wages and salaries being paid by the government, which is on an enormous scale. Something like 25% of the labour force of the UK is being paid for and supported by the UK government right now. Part of the reason why unemployment has not gone up, hardly at all, in fact, in the UK, despite the enormous reduction to economic activity. Of course, that has generated an enormous increase in government spending, coming at the same time as there's a dramatic reduction in tax revenue coming in, and therefore the size of the fiscal deficit has been, the increase in the fiscal deficit has been on an extraordinary scale, comparable to what has happened in world wars. The UK government is probably going to borrow 15% of GDP more this year than it expected. It was already going to run a fiscal deficit. That's now going to be absolutely enormous, and it's prompted a reaction from the Bank of England, which has basically said, we will buy all the extra government debt that is being issued. So an enormous increase in the scale of government operations. In monetary policy, the deficit is almost off the scale relative to what people had expected. And all this has come about with a Conservative government. This is a Conservative government that normally we expect to be relatively wary about increasing government intervention and increasing government spending. This is, I would say, unprecedented outside major world wars for the UK. I want to draw very briefly, just to put this in some sort of context, and make a political point about this virus, which is to compare it with something that I'm just about old enough to remember. I'm not sure how many people on this call will remember this, but about 50 years ago, there was what at the time seemed rather a serious virus, which was the Hong Kong flu of 1968-69, a flu which actually killed about 80,000 people in the UK. The current UK recorded death rate from this virus is 40,000. So the Hong Kong flu of 68-69, in terms of deaths, was, by the end of it anyway, twice as serious as the number of deaths we've experienced so far. The UK government at that time, it was a Labour government, Prime Minister was Harold Wilson, basically said there was nothing much we can do about this. And remarkably, the UK population, or perhaps not so remarkably, took the view that, well, this kind of stuff happens. We don't expect governments to be able to protect us from dreadful things that come along, and we'll just get on with things. Now, I'm not pretending for one moment that COVID-19 is comparable to the flu in a medical sense. I think it's much more serious than that. I'm just making a political point, in a sense, which is that people over the last 50 years in this country, and I think in many countries, have come to expect governments to respond to bad things that happen in ways that previous generations did not expect. They thought bad things happen and sometimes governments can't help you, and you just got to sort of grin and bear it and get through life. 1968-69, pretty much all the adults in the UK had lived through the Second World War. There's very few people now in the UK who've lived through an experience as dreadful as that. And I think that's part of the explanation as to why the response of the government in this country, and indeed in many other countries, has been on such a scale comparable to their reactions to wars, in a way that wasn't true of earlier medical catastrophes. So we're likely, as a result of this, to have a much bigger role for government in the economy for many years to come. Despite the scale of the response of the UK government, it hasn't been a terribly successful one if you look at the number of fatalities in the UK, the number of people who've had the infections relative to other countries, particularly if you compare it with most other European countries. The UK is really close to either the top of the table or the bottom of the table, depending on which way you put it, the end that you don't want to be anyway at the table. And partly it's that we had a relatively slow response early on, and then we had a lockdown which actually in the UK has lasted longer than in most other European countries. A lockdown which began in mid-March and only really was eased just a few weeks back, so it lasted about 4 months. I'm going to very briefly show you a few numbers, which is an attempt to gauge whether or not the UK government might have kept the lockdown in place longer than it needed to. That's a very controversial subject. It involves trying to assess and balance economic costs and future medical costs, which are a side effect of the lockdown, against the benefits of sharply reducing the rate of increase in the infection in the UK. That's a very difficult calculation to make. What we have some confidence about is the scale of the economic cost, which is very large, at least 10% of GDP in the UK this year, 2020. It's likely that the infection would have grown much more rapidly and maybe deaths would have been a lot higher had there not been a lockdown. The question though is whether or not the UK government kept the lockdown in place for longer than it might. If you're trying to do these sorts of assessments and calculations, you need some way of doing something which morally, philosophically is very, very difficult. And that is, in some sense, trading off medical outcomes, let's call it deaths, against long-term harm that arises partly as a result of economic disruption. Of course, that long-term harm will show up in unemployment, which can lead to increases in depression, very predictably so, in fact, does great harm to mental health. So it's not as crude and simple as, oh, well, it's money on the one side and it's lives on the other. It's human welfare on both sides of this balance sheet. Let me briefly show you some calculations which are controversial and somewhat macabre. So if we could just look at the next table, and I'll explain very, very briefly what this mass of numbers looks like. And I'm just going to focus on the first column on the left-hand side, the one that says 9% GDP loss. So what we're going to do in this table, which I'll talk you through in no more than 2 minutes, is to compare essentially two numbers. Let's be as favourable as we possibly can towards the strategy the UK government has followed of basically locking down the economy for almost 4 months. We'll be as favourable as we can toward that strategy by saying that the only costs that generates are losing some GDP this year in 2020. So no longer term damage, no greater deaths from cancer and heart disease in the future because we weren't treating those because we devoted all medical resources dealing with the virus and locked down the economy so that people actually didn't want to go to hospitals, didn't want to go and have that cancer screening that they may have been scheduled to have. So let's assume that the costs are as small and as narrow as you could make them. We've lost about 9–10% of GDP this year, 2020. That would give you a cost of about £200 billion. So that's the left-hand column as you read down. We've got a minus 200 billion in each of those cells. What's the benefit of having had this lockdown? Well, of course, the infection rate has come down quite sharply. The death rate has come down quite sharply. And that's very important. And I think most of us would agree that an initial lockdown that turned the corner in terms of infections and deaths was very valuable. The question is, should you have kept it in place for 4 months? How many lives have been saved? Very difficult calculation. The top end estimate is that it might have been 400,000 or so. In other words, you take the Imperial College's own estimates of what might have happened if nobody changed their behavior at all. No lockdown, people didn't wash their hands, they didn't listen to the government advice, they carried on going to pop concerts and venues where there were tens of thousands of people. The virus spread right across the UK population, pretty much everybody got it, and maybe there were as many as 400,000 deaths. That's an extraordinarily pessimistic assumption. I think it's at the extraordinarily pessimistic end of what might have happened had there not been a lockdown. After all, even without a lockdown, people were nervous. They did start washing their hands. They did start not going to events where there were lots of people. So the idea that it was only the lockdown that saved us losing 400,000 lives is very unlikely. How do you value losing lives, though, against this narrow cost of GDP? Well, the National Health Service in the UK has a way of making those difficult trade-offs. The National Health Service in the UK has guidelines which say that a medical treatment which is expected to add 1 year of decent life to an individual, some medical procedure that may be expensive, is it worth doing if it adds 1 extra year of life? In the NHS, the maximum you can spend to do that is £30,000. So imagine now you value all those lives saved by calculating how much longer people would have lived if they hadn't got the virus, and you value all that at £30,000 for every extra year on average people might have lived. you can sort of do this economist kind of gloomy calculation of trading off. All that mass of red negative numbers suggests that the cost of the lockdown kept in place for 4 months may well have been very large, even to an optimistic assumption about how effective it was in terms of saving lives. Let me move on to offer a few thoughts about Brexit before coming back to a speculation about where we might be going next. And I'm going to accelerate a little bit in terms of time. So if we can just jump on one slide, and I'll come back and say something about these numbers at the end. Brexit, I think, is a significantly less significant event, certainly in the near term. Economists have kind of predicted what would happen if the UK left and then didn't reach a trade agreement with the other countries that were still in the European Union. And that may well happen. We have left the European Union. By the end of this year, there may not be a trade agreement. So it may be leaving the European Union without any kind of trade agreement. That's certainly a possible outcome. Economists have kind of predicted what might that mean and have come up with estimates that maybe it's worth 3-4%, pessimistically 5-6% off GDP, which could last for several years. So it's not trivial if you got to the bad outcome of no trade agreement, but relative to losing 15% of GDP this year and ongoing costs from the virus, I'd say it was a less significant economic and probably political and social event as well. Let me just make one brief political point, which is that even though many economists take the view that the costs of leaving the EU probably outweigh the benefits, I don't think one should immediately conclude from that all economists think that it's a crazy thing to do. The main political reason why many people voted to leave the EU in the UK was that they were very skeptical about ever closer union. They did not like the direction in which the European Union seemed to be going. They did not like increasing centralization of decisions that they felt more comfortable being made locally, and perhaps were prepared to take some economic cost to avoid that. So I don't think one should conclude, even if you agree that the economic costs of Brexit are likely to be larger than any benefits, and I suspect that is true, I don't think it follows from that the UK has done something which is, crazy, because it's largely an argument about political sovereignty. And for the UK, as I mentioned in this last bullet point on this slide, membership of the EU has always been the result of what you might call a calculated decision that the things you don't like weren't bad enough to offset the things you did like. It was never a love affair, frankly. It was always a sort of cost-benefit analysis. And the more it seemed that ever closer union was the direction that EU membership would take you, the more skeptical many people felt about whether this was a train you just simply wanted to stay on for as long as it was moving, because it seemed to be moving to somewhere, the destination of which you were somewhat skeptical about, for many people in the UK. Maybe we could just move on a couple of slides, since I'm aware that time is moving on and I don't want to give you that lecture I promised I would not give you. So in terms of economic costs, let's suppose we don't get a trade deal. And so there are costs to export and import things between the UK and the rest of the European Union, which were not there before. How bad is that? Well, it's not trivial. It could well be worth 2, 3, maybe 4% of GDP, which would then last for many years. And it means, of course, that the standard of living in the UK will be, somewhat lower than it otherwise would have been. Of course, losing 4% of GDP sounds pretty bad, and who would want that to happen? Because if you thought that the average rate of growth of the UK was, say, 2% a year, which we used to think was normal, and you lost 4% of GDP, what that would mean is that the standard of living you hoped we might have got to in the UK in the year 2048, you'll have to wait till 2050 to get there, because you need 2 more years of 2% growth to make up for the loss of not being in the European Union. When you put it in those terms, 4% of GDP suddenly doesn't sound such a dramatic thing if you're looking over the longer term. Maybe we can move on just a couple of slides, and I'll wrap up in just a moment. Now you might say, well, how come is it that these costs don't seem to be that dramatically high. After all, we were promised by some politicians anyway, before the referendum 4 odd years ago, the then Chancellor of the Exchequer, George Osborne, the Prime Minister then, David Cameron, gave the impression this would be a catastrophic event if the UK left the European Union. Why might it be plausible that it only costs a few percentage points of GDP? Well, I think that's partly because lots of the costs of trading with the rest of Europe actually haven't changed. Of course, there's still the same physical distance of moving goods across borders. The UK was never going to adopt the euro, a common currency. So all those currency costs of trading with the rest of Europe, which are unchanged whether or not the UK is in the EU or not. There are issues to do with different legal systems, issues to do with different languages, which all haven't changed either. So lots of the things that make trading goods across borders somewhat costly are exactly as they were when the UK was still in the EU. So we shouldn't think of this event, the UK leaving, as suddenly there are lots of costs of trading that weren't there before. Many of them are simply unchanged. Let me conclude, though, with a slightly more optimistic note on the Brexit situation. My guess is that actually the UK does reach an agreement by either the end of this year or early next year on some sort of trading arrangement which minimizes some of the costs of being outside the EU. If we went to so-called World Trade Organization rules, and there would be tariffs to pay on trading in goods, I suspect we'll avoid that. It's not in the interest of the EU or in the UK for there to be tariffs on trade between the two economic blocs. So I suspect, despite the rhetoric at the moment that it's all very difficult, I suspect that's where we'll end up. On services, that there may be slightly more issues, although there are already issues when the UK was in the EU on trade in services, because there wasn't the same kind of agreements on trade in goods anyway. So if we just move on perhaps to the final slide there, although we're there already. So my guess is that we get some kind of trade deal, and that means that the Brexit costs, narrowly defined in terms of economics, turn out to be maybe only a few percent of GDP. On COVID, which I've consistently argued is a bigger economic, political, social event, at least for many years to come, than Brexit, I'm somewhat less optimistic than on the Brexit side, where I think we will get some kind of agreement between the UK and the EU on many issues. But I do know that many people at Imperial and other universities in the UK and universities throughout the world are working very hard on a vaccine. I suspect there's never been more brain power and scientific resources devoted to one issue in such a short period of time as trying to find a vaccine for COVID. And if that does come, I hope and expect it might do, sometime early next year, and is then rolled out during the course of next year, it may be that, this time next year, actually we can sort of look back on something that's largely behind us. So on that optimistic note, let me end this non-lecture and series of speculative points and open up the discussion.
Okay, that was super interesting, David. And we have a bunch of questions. You've obviously got people thinking about lots of different things. So we have 10 questions, and people have been voting for their favorite questions. So there's kind of a race for which question is gonna get asked first. But I think, given what you were just saying, that Oliver's question follows on exactly from what you were saying. So I think it's a good place to start. And what Oliver has asked is, what's the interaction between COVID and Brexit? Is it just additive, or is it multiplicative, or how do those? What's the impact of those two things happening at the same time? I guess then part of that then would be, should the government be thinking about trying to extend the transition and get through the COVID and then do the other? How do you think about that?
I think they are probably to some extent independent. I mean, the Brexit costs, just thinking through this out loud, I mean, the Brexit costs are largely to do with increased barriers to trade in goods and services that weren't there at least to the same extent as they could be if we don't get some kind of trade agreement. The COVID costs are very different kinds of things. We're all familiar with what they are. They are the after effects of having this huge lockdown. People are very nervous about going out and spending money. Companies have accumulated large amounts of debt because they haven't been able to sell anything, many of them, for sort of 4 months or so. Some companies will struggle to even reopen. Some small companies may have now got so much debt that they can't dig themselves out of the hole. The two kinds of costs of these two phenomena are so different that I'm not sure there's an awful lot of interaction between them. So I think we should think of them as potentially additive rather than them interacting with each other and either being lower than the sum of the two separate bits or greater than the sum of the two separate bits. Of course, the timing is unfortunate, to put it mildly, in that, if there was ever a time when you didn't want there to be some further disruption to trade and a further hit to GDP, it would be right now. And that may be coming at the end of this year if there isn't some kind of trade agreement. So it's very unwelcome, the timing, but I think the two events are in some sense additive and independent.
Okay, that's very good. And I guess the number one question, which is from Cordian, it's got 4 votes. It's so we got to ask this one. Sort of what we've seen is a lot of the anti-Brexit people were hoping that the obvious damage to the economy from that would get people to change their mind, and there'd be some second referendum or some process would go by that we in a couple of years go back. Now people are saying, well, that'll be hidden by the COVID impact. But from what you've been saying, from an economist's point of view, though, you can unpack those things. You can see the difference between, and if it's not multiplicative, you can measure that, and we'll be able to have a proper conversation about what's the impact of these two different things on our economy. Is that accurate?
Yeah. Well, I think my guess is that the two economic impacts are sort of independent of each other, but in practice they will be very blurred, because what we'll see, as the UK goes through next year, we'll get a GDP estimate for the first quarter, the second quarter. There'll be a bit of a bounce back because you start from such a depressed position. Those people that want to argue that Brexit is not generating economic costs will say, oh, look, GDP's just gone up. And no one will be able to definitively say, oh, yes, GDP went up in the first quarter of 2021 by 6.2% or something. And it would have gone up by 8.9 if there hadn't been Brexit. And so the Brexit cost was, but it'll be far more foggy and uncertain than that. So I don't think anybody will be able to definitively work out what you might call here's the Brexit cost, here's the COVID impact, or the partial recovery from COVID. So it will make the thing very foggy. And those who think Brexit is a terrible thing will say it's a terrible thing. And those who say, I told you so, it hasn't generated any cost at all, will say that. I think the one thing we will not get, and it's more or less died out as a political issue in the UK, is a second referendum anytime soon. I don't think there's any appetite whatsoever to rerun the referendum, having just now left the EU. I mean, partly because I'm not sure the rest of the EU would want the UK back in anyway. So you could have a referendum. It might be it said, all right, we'll go back in. You've got to persuade the 27 others, and they'll say, forget it, we don't want you back after all that. So but I don't think there's any appetite for it anyway. So rejoining the EU, I don't think is on the agenda for many, many, many years to come.
Okay, so the remainers, we should just give up on that one, I think.
Yeah.
But on a different topic, Jim has asked a good question, which is with Brexit happening and the attempt to negotiate a comprehensive trade deal. How is that being impacted? How is that being affected by by COVID? I mean, is that making it more? There's more enthusiasm to do this because of this, or it's not having any impact at all, or it's actually getting in the way?
Well, I think it's getting in the way in the sense that, as I understand it, there's been virtually no face-to-face meetings between the UK negotiating team and the EU negotiating team. You know, they've been doing Zoom calls like this.
Yes.
But it's all a bit clunky, and really the negotiations, as far as I can see, have made virtually no progress on trade agreements, even though we're in August and the UK left at the beginning of the year. So we've had 8 months of what is supposed to be a 12-month horizon, 12-month period when you're trying to work out what's the new trade agreements. 8 months of getting precisely nowhere, or pretty much nowhere. So it's not been helpful in that sense. I think what it has not done, the virus, is make this UK government feel that its negotiating position is much weaker and it can't hold out for the things it wants. So, and maybe that means an agreement will be more difficult, or maybe it just means that you'll go right to the wire and something will happen on, you know, December 30th.
And what about with the US, the one that they're negotiating with the US? I mean, what kind of time frame do you think that's? I mean, they don't seem, there's no deadline for that, I guess. It's not like, other than the EU exit thing, but
right.
I mean, there's no actual deadline. So that could go on for years, or it could.
That could go on for a very long time. Obviously, the UK government is wondering, like every government in the, what kind of administration will there be, you know, after the election. I don't think anything definitive will come out on a UK-US trade agreement between now and the election, and then, you know, who knows what comes after that. So as you say, there's no date that sort of you're going to get something happening by this date that's clear.
Yeah. So then, okay. Yeah, because that was Jim's comment, was really about the US trade deal going on with that. Got lots of other good questions here. There's one which I would I find quite interesting myself. About the stock market. What? I mean, the stock market seems completely disconnected from the economy at this point in history. There was just the Nasdaq, I don't remember, one of the indexes in the US earlier today hit a new high. So I mean, this is something's going on there. Is there going to be a big crash in a couple of months? Should we all be selling all our stocks and putting the money in the bank?
It is extraordinary, isn't it? It is absolutely extraordinary because, I mean, if we look back just to the sort of the few weeks at the end of March and early June, when people began to realize right across the world, this is very serious, having huge economic impacts. Stock markets were down by huge amounts. I mean, they were down sort of 30-40%. And we're pretty much back where we were at the beginning of the year, I think, particularly for the US stock market. So, you know, there's lots of different possible stories. Let me give you 3 stories, two of which are consistent with it being a rational response. One of which just says, look, it's crazy. It's massively now overvalued. And so let me start with the
okay.
The level of interest rates set by, you know, the Fed in the US and the ECB and the Bank of England, people had always expected that interest rates were going to stay at relatively low levels, but they were going to probably edge up over the course of the next few years. And as a result of the virus, and you look at what's happened to yield curves, the market expectation where interest rates are going, I mean, they're just dead flat at 0 in lots of countries as far ahead as you look. So in the UK, take the UK, right now, the 10-year yield on UK government bonds is virtually 0. So what that's telling you is that the market, in some sense, is expecting the Bank of England not to increase interest rates for at least 10 years. If you look at so-called real interest rates, adjusting for inflation, the 10-year real interest rate in the UK, this is the market price of government bonds, even though the UK government is running a massive deficit, you would have thought was very bad for bond issuance, and would make people reluctant to hold UK government bonds. The real interest rate on 10-year bonds in the UK is moving toward -3%. So just think what that means for a minute. I mean, if you invest money, you buy a bond issued by the UK government, hold it for 10 years, you're losing 3% a year in real inflation-adjusted terms. You've lost 30-odd% of your money, guaranteed, and people are still buying them. So if that's telling you something about people's expectations, the interest rate's just going to say super low as far ahead as you want to look. And of course, in itself, that's actually rather good for valuing assets like equities, which are the present discounted value of future earnings. And if the discount rate is linked in some sense to the interest rate, there's a very low discount. And that stream of earnings, even if the dollar value of the future earnings has gone down, when you do the discounting at a lower interest rate, the present value has gone up and they kind of offset each other. So you sort of make sense of the stock market that way. Well, maybe. The other way you make sense of it is a bit of that, interest rates are lower, discount rates and all that. Plus you say, okay, we're in an economic mess at the moment, but a vaccine is likely coming. Equities are here for the long run. Capitalism will survive. A year from now, it's all kind of over. We will look back on it and say, well, wasn't that a terrible thing we all lived through? So if you're being kind of long-term and rational, you might look through a lot of the short-term pain that we're all going through right now, plus the lower interest rates, and say, well, actually, why should stocks be lower in value? Sometimes I wake up in the morning and I believe those stories and I say, okay, yeah, you can make sense of the stock market. And then on other days you wake up and you think this is just crazy. Look, unemployment in the US has gone up massively, deficit's going to be higher. We're not really sure that a vaccine is coming. There's all these long-term impacts on disruption to young people's education. Unemployment's going to go through the roof in the UK between now and Christmas, unfortunately. Who in their right minds think that stocks are actually worth the same now as they were in January? So you pays your money, you takes your choice. You can come up with an economic story as to why stocks might not fall much in value. I'm kind of inclined to the view that they look pretty expensive to me.
And Apple's now worth $2 trillion. So they were the first $1 trillion company, what, 2 years ago, and now they're the first $2 trillion company. So yeah, if you didn't buy your Apple stock, buy it now, quick. Karen asked an interesting question, which is, does the fact that we've left the EU give the UK government more tools to deal with COVID? Does it make a difference? Does it make it better or worse? Or
it doesn't give them a whole lot more because the UK already had complete independence on monetary policy. I mean, we were not a part of the euro area. It wasn't the European Central Bank set the UK interest rate. So the Bank of England hasn't been given any new tools. And the UK didn't really face any restrictions on its fiscal policy either from its EU membership. The one area where it clearly does have more, well, let me be careful about this. The one area where in principle it has more freedom now than it would have had is in the whole area of state aid.
right.
So state aid rules, as many people will know, state aid rules overseen by the European Commission say, well, you can't subsidize particular industries if you're going to be in the EU, you've got to be a level playing field and all that. And the UK government may decide that it now needs to subsidize airlines in the UK or the hotel sector or restaurant. I mean, it has subsidized in some sense vast swathes of the UK industry by paying the wages of people who work in them. So being outside the EU means you're not subject to the state aid rules, except that, and here we come back into the whole negotiations about what does Brexit mean. In the trade negotiations that haven't got very far, the EU side is saying, well, hold on, if you want to trade freely and don't have tariffs and all that with the EU, you can't go subsidizing particular sectors of the UK economy. So they're trying to reintroduce jurisdiction over state aid to the UK in exchange for, basically free trade between the UK and the rest of the EU. Now, the UK government is saying, we're not having that. So we'll see where that goes. But I think the big answer to the question is, has the UK bought itself lots more freedom to do things in countering the virus that it wouldn't have been able to do inside the EU? I think the answer probably is, well, no, not really.
Okay, that's a bit disappointing. I think we were hoping for a different answer the way the question was posed. Talking about the EU, we have a question here, which a lot of it has five likes, which is what about the EU? I mean, given the financial cost of responding to COVID, is the EU going to survive this? Or will the UK's decision to leave look pretty like it was a pretty good idea actually to get out of that mess?
What a wonderful question! What a very good question. I think there are reasons to. I think the tensions within the EU about the direction of travel will be exacerbated as a result of the virus. So by the tensions, what I mean is the tension on the one hand between the idea that for the EU to prosper, there needs to be more centralization, the ever closer union mantra that really has been the sort of rallying cry of at least the European Commission for decades. The tension between that and, on the other hand, the skepticism about greater centralization and power being taken away from the nation states. And, there's a group of largely Northern European EU countries and for slightly different reasons, some Eastern European EU countries that are increasingly skeptical about centralization. And I think the economic damage done by COVID-19 will exacerbate that. And I think we've seen it just in the last few months when there was a very difficult to negotiate agreement that was only agreed a couple of weeks ago on a very large scale fund, which I think the European Commission will essentially manage to help countries that have been most affected by the virus deal with its economic impacts. And there were some Northern European countries, I think they're called the Frugal Four, if I've got that right. Yes, which I think are the Netherlands, definitely. The Netherlands was the leader of the Frugal Four. I think the other countries are Austria, Sweden, and Denmark, if I've got it right. Somebody will correct me if I got the countries wrong. Yes. There were the four Northern European countries that said, well, hold on, we don't want there to be an enormous transfer of funds between countries within the EU that is managed by the European Commission, which, as I understand it, will now be able to raise debt to finance this. But of course, ultimately, those funds will come from contributions from member states. There's nowhere else for the money to come from. You're not going to get it from Mars. And those four countries were very skeptical about the large-scale transfer of resources within the EU that would involve, of course, resources moving from typically the higher GDP per capita countries, which tend to be in the north, to the south and to some extent the east. And the reason I think that this fund, an agreement was reached, was because the Germans kind of pushed for it. Merkel pushed very hard for it, even though I think there is a great deal of skepticism within Germany usually about these kind of transfers, which predictably will mean money largely going from the north to the south and the east. But such is the political capital she's got right now that she was able to get Germany to push this thing through. But I think it's a reflection of the tensions within the EU, which I think the economic damage will exacerbate.
We have a couple of really interesting questions on quite different themes, and maybe this one would be just to talk about this for a minute. One of the attendees is referring to a recent article in The Guardian by Paul Nurse, saying worrying about the impact of this on science. As the director of the Francis Crick, I just saw him interviewed about it also on the BBC, and he said that this was going to necessarily result, or he thought it would result in a loss of influence and a loss of global standing in terms of science. What are your? Are we seeing that already? I mean, I haven't heard much. I've heard about this, but I haven't seen anything because all the programs and everything continue until January. But what do you think? What are your thoughts on that?
Well, I don't have any great insights on this one in particular, and I suspect that many people in this discussion today will know a lot more about this than I do. I think, Nelson, I mean, I share your view that I think so far, although people are worried about this coming down the road, I don't think it's happened yet. My understanding is, which is very patchy, and others will know better, that a lot of forms of EU funding for big research projects which cut across boundaries, in principle, are still open for the UK, even if we're not a member of the EU. And you remain a European country even if you're not an EU country. And I'm somewhat more optimistic than Paul Nurse, but I'm also completely aware that Paul Nurse knows an awful lot more about this than I do.
Yes.
Economics is a very cheap subject, in the sense that if you've got a computer terminal and a brain and some time, you can do it. And that's not true of big science, where you need vast budgets to do research. So if Paul Nurse is worried about it, there probably is something to be worried about.
Yeah, and he knows a lot about funding science. So yeah, I tend to think he's saying there's a problem, there'll be a problem. Yeah, I agree, because we know the UK punches above its weight in terms of the European research programs, the government-supported research programs. The UK actually gets much more than its share. So there's no way the UK government will be able to make up for that. Changing the subject a little bit, but going back maybe to something we talked about before, there's a question about all the stuff that you're talking about, the interventions but the central banks are things they're doing to try to keep things going. What's all this stuff mean for the banks, the retail banks, in terms of them? I mean, are they going to be able to make any money? Are they being driven into the person who asked the question says, are they just turning into utilities, and their ability to actually be very profitable in the current situation seems limited?
I'm now going to sound like the gloomy economist, the dismal science and all that. I think that, let me just start with the UK and then interested in people's reactions and yours. Indeed, Nelson, you know probably more about Canada than the US than I do. Let me be parochial and start out with the UK. I think there are reasons, unfortunately, to be very worried about UK banks. Firstly, it's almost inevitable now that between now and Christmas, unemployment in the UK is going to go up a great deal. The UK government is scaling back its support scheme, whereby it's essentially paying the wages of 25% of the workforce. It's already starting to be scaled back, and by the end of the year, unless the government changes strategy, it will have stopped paying the wages of people who have been furloughed. It's already the case that lots of big companies in the UK have announced redundancies. Marks and Spencer's announced 7,000 redundancies this morning, I think. And that's even before the furlough support scheme is being wound back significantly. So I think we're going to see a big rise in unemployment in the UK. Historically, that's always tended to mean that bad debts for the banking system go up. Lots of people will struggle to pay their mortgages. UK banks, of course, are heavily exposed to lending to the UK household sector and the UK corporate sector. It's going to be a very difficult year, possibly a very difficult 12 months from now on forward for many households and many companies. I think it's hard to imagine that bad debts from lending within the UK won't rise very substantially. I suspect that will be true in many countries. I suspect it's already true in the US. Not sure about the situation in Canada, which seems to have got away with a much better virus story so far economically than many other countries. But I think there's quite a lot of bad debt to come for banks in the UK and maybe in many other European countries as well. The question then is, well, okay, are they sufficiently well capitalized that they can deal with the hit? And there you get into a murky question about how do you measure how well capitalized the banking system is. The official message coming out of the Bank of England is, don't worry, UK banks are really secure. They've got lots of capital. They can take the hit. We've done lots of stress tests. They're all fine. And that may be true, but then again, it's what you'd expect the Bank of England to say at this point anyway.
It'd be quite worrying if they said anything else, right?
Yeah, if there's anything else, you really know there was a problem. Yeah.
One of the things
let me get back to you, Nelson. So I'm interested in your take on, and indeed anybody else on, and I've talked too much about, Canada in particular. There's a lot of people on the line from Canada about how things have played out in Canada, where it seems that the story of the infection and the spread of it and deaths and disruption seems to be better than both in the UK and in the US. Am I right?
Yeah, I mean, Canada sort of took action a bit more quickly, I think, and that helped. Canadians are well behaved, so when the government tells them to do stuff, they do it. It's not like Americans tend to not maybe listen as much to the government, at least some Americans. So Canada has done fairly well. The economic damage is still huge. I mean, that hasn't been. I mean, it's not as bad as the UK, but there's still really significant economic problems coming. The same thing coming down. They're right now all covered over by government paying for everything. I think the banking system in Canada is very stable because we have such concentration in the banking system. Just a small number of very large banks. So that makes it much easier for the government to manage and much more stable, because for one of them to fail, they're really big. But at the same time, there's still been a big financial hit, but not as significant as in the UK, which seems one of the worst in the world, from what I understand. And actually, when we have some people actually giving us some information, you were talking about U.S. banks. Yeah, but the COVID reality is one of our attendees is saying the COVID reality exceeds the stress tests used by the U.S. government. So whether the banks will be able to survive it or not remains to be seen. One question, we've been talking a lot about North America and Europe and UK, but I have a question asking about China and what's happening with trade with China, and what the future. Well, what do we think is going to happen with China-UK trade following Brexit? That seems to be certainly there's some difficulties in terms of the whole Huawei thing and other TikTok and other things now, more and more increasing area of friction. And I think part of the plan had been to increase trade with China, to have some sort of more balanced trade with China. Now that's unclear that maybe is going to happen. What do you think is going to happen in terms of China? In terms of, we talked a lot about this a year ago when we were in China, in Singapore and Hong Kong and stuff. But lots changed since then.
A lot has changed, not so much in terms of the economics, but just the political situation has been, transformed in some ways.
It's incredible.
And the UK government now has moved dramatically from where it was. And if you could look back just a few years, really, to the sort of Cameron the Exchequer, it was a very pro trade with China government,
Yep.
very determined to get Chinese investment coming into the UK, to encourage trade, to encourage, you know, Chinese ownership of UK, what you might call, you know, UK companies, UK assets, and that's just completely changed. And I'm not sure the economics of trade have moved very much, but the political situation is transformed. Now, I'm not a political scientist. You might argue that, you know, if we don't get second-term Trump and there is a less hostile to China president, that the UK will move back to a sort of slightly more, let's put it, you know, more trade-friendly frame of mind with China. I'm not sure that that's right, because, and again, you know, you'll know many other people on the call. I don't see the Democrats in the US taking a dramatically different line on Chinese foreign policy issues than the Trump administration. I mean, maybe sort of less tweets in the middle of the night, but, you know, on the substantive issues, is it so different from Trump thing? And maybe the UK government, you know, is sensing that actually, even if we do get a different president and a different, you know, it's a Democrat in the White House, that actually some of these big issues with Chinese foreign policy, you know, we need to respond differently in the UK than the Cameron Osborne era.
Yeah, and I think that's a really interesting one. I think especially in terms of technology companies, the U.S. government has to be quite careful, because it could easily, right now, the big U.S. technology companies have a global monopoly. So there's only two operating systems, and for phones and for computers, and they're both American. And if they're not careful, they're going to create, and what's happening is they're creating conditions for China to build an alternative and take part of the world, Asia, with them. So this has to be handled and Trump's approach is short-term popular, but not very smart in terms of technology development in the long term, because he's going to create an Airbus for the US industry. He's going to create a Chinese alternative technology platform and all the bits that sit on that. So I think that's a really interesting question. I think that right now, Trump's approach, he's reacting, and I think Senate and Congress are supporting his reaction largely, but they have to be quite careful, because they could easily, in the longer term, shoot themselves in the foot in this whole area of technology. It's different with food and other things, but in the you know, when that's what Apple and Google are worried about, like what is the government, but is there a way out of this? Like, is there a way to avoid this happening at this point? Maybe not. So it's quite an interesting question. Okay, we have lots more questions. Some of them are connected. We've kind of covered a bit of it already. Let me see which one I was going to ask here. I got some interesting ones about timing. If COVID had happened 1 year earlier, would we have voted to exit? That's a very good question. But I guess. One of the people asked a question about something you said that I also found quite interesting. Where you said, compared to the time of the Hong Kong flu, people's expectations for what the government should be doing have changed dramatically. So are you aware of any studies of that? Is that something, I mean, it seems very intuitive that that's so, but why has that happened? Just that government's gotten bigger, but people's expectations have really changed. So that's that changes the nature of these kind of activities.
Yeah, I mean, to be honest with you, that was a bit of amateur sociology on my part, and just being old enough to kind of remember that period rather than any carefully controlled political science study. Mm-hmm. But I did read a little bit. I was kind of interested in the 68, 69 flu, and read a little bit the reports at the time of it. And one thing that did strike me was a kind of attitude in the press coverage at the time, when you look back at it now. It was, first of all, people were very worried about the scale of it. I mean, it was big. Lots of people died. Wasn't clear at the beginning how serious it was. Spread around the world very quickly. Million odd people, as I recall, maybe well north of a million actually ended up dying across the world. So it wasn't a trivial thing. But the reaction in the British media at the time, and certainly the reaction in the UK government, was, well, you know, life is tough. Stuff happens, and you kind of you get through it. And there was no sense of we must stay at home. I mean, the government at the time did say wash your hands, okay, but that was about it. That was the UK government response at that time, was wash your hands and, you know, just get through it. There was one. This is true story, I believe. There was one sporting event in the UK over 68 and 69 that was cancelled when Fulham were playing, I think it was Stoke City, or maybe it was Blackburn Rovers. And the match was only cancelled because all 11 of the players that were chosen by Fulham at the beginning of the week had gone down with the flu by the end of the week. And in the press, it was reported that Fulham were being pathetic, and why couldn't they put out a team? So this was the kind of war generation that said, "Oh, pull yourself together, you know, what are you being such namby-pambies about?" So I say that, I mean, I'm kind of half joking about all this, but I think there really was. I mean, okay, one thing that's certainly true is that the level of government expenditure relative to GDP in the UK and in lots of other countries was much lower. People were used to governments not being able to do as much as they expect them to do now. Yep. I think the other big thing that was different, and again, this is amateur politics for me. You think, you know, what happened this time around was in the UK that, you know, every night people are bombarded with the news on their phones, on TV, radio, with the news of so many people have died in this country. The infection has done this. Look what's happening in this Italian city. And the government here has done this and the government has done that. And the pressure on the UK government to be seen to be doing something is immense in a world in which this kind of news travels around at the speed of light. And that was absolutely not true back then. In 1968 in the UK, there were 2 TV channels, BBC 1, BBC 2, maybe we got ITVs, or maybe there were 3. They went off in the air in the afternoon. BBC 2 used to stop in the evening. So, you know, people's news was
quite different.
Just tiny. You know, you didn't know how bad these things were in real time. And therefore the pressure on the government to do something in real time has now become absolutely immense. And I'm not saying for 1 minute that COVID-19 is not extraordinarily serious. But across most of the world now, governments are under intense pressure to be seen to be doing things like immediately.
Yeah, and there's the league tables of numbers of ill
right,
people that are
right.
ill.
And you know, the UK government had no choice other than to have a lockdown, because nearly every other country was doing it, and the UK infection rates were going up. Only Sweden, you know, across the world almost, was kind of very clean and explicitly, consciously, and for, you know, not stupid reasons, chosen to go in a different direction. It's the only country, really. And I mean, apart from, you know, Brazil has done what it's done, but, you know.
There's another question here that's quite, we probably have enough time for 1 or 2 more questions now. 2 more questions, maybe. One is, we haven't touched on this, but it's interesting. I think it's something that's been in the press a little bit, is, I mean, London, there has been a lot of money passed through London that is not completely obvious where it came from, and, you know, sort of so there's, and a lot of the rules and controls are EU rules and controls that is trying to get that under, trying to keep that, you know, trying to keep this sort of dark money or black money from coming, you know, getting laundered. after after Brexit, is that going to become more of a concern? Or, I mean, do you know, have any sense of what the government's plans are in terms of how they're going to manage that? They continue to do the same thing. What's your thoughts on that one?
I think money laundering and trying to, stop, if you like, dirty money flowing through London, and some of it ending up and sticking in London and showing up in high property prices in certain bits of London. I think like in many areas, actually, the UK government wasn't particularly constrained one way or another by its EU membership in responding more or less aggressively to the evidence on that.
Yep.
So I think it's one of those things again where, despite the rhetoric from the government of we're taking back control, implying that we have been stopped in the UK by doing all kinds of things that we would otherwise have done, which would have got rid of problems. And now for the first time, we can throw off the shackles of EU membership and now do the right thing. My guess is that in this particular area, that's largely a myth, and that the UK government has, let's put it this way, and not just the current government, but many governments now for decades have not pursued sort of money laundering with the enthusiasm that it might have, partly because having a lot of extremely wealthy people park money in London and buy things in London was not considered terribly problematic. Now that may change, but I think it's been that more than, we were constrained by EU rules from doing anything about this. On the contrary.
Yeah, so that's interesting. One of the things that we just have a couple of minutes left. We had a conversation about debt, and I guess one of the things that I keep watching is the total UK debt. Are we ever going to even try to pay that off, or is that just going to sit there and inflation will eventually make it into a small enough number that it doesn't matter, because it's such a big number and it continues to go up?
Yes. Well, just focusing on the UK government bit of it, it has gone up a lot. So UK government outstanding stock of debt is now just north of 100% of annual GDP. Before this crisis, it was kind of low 80% or so, which was still a lot higher than it was before the financial crisis, 12 years ago. So it went up a lot in the financial crisis, from 40% to 80%, roughly. Stayed around 80, 85%. It's gone up another 15% now. It's just gone through 100% of GDP. So if you look at the graph of the last 20 years, it's kind of frightening. And you think, my God, how are they going to get rid of this ever? Is the only way to either default or to have like massive inflation, which is in itself a kind of default anyway. I'm a bit less pessimistic than that, partly because if you look at the 3 previous occasions when the UK stock of debt has gone up by a huge amount in a short period, they are the Napoleonic Wars, and at the end of 1815, after the Battle of Waterloo, the UK stock government debt had gone up by 40, 50% of GDP. It's now gone up 15%, not 50%. First World War went up a huge amount. At the end of the Second World War, UK stock government debt was 260% of annual GDP. It's now 100% of annual GDP. So after those 3 previous occasions, Napoleonic War, First World War, Second World War, how did we get the stock of debt back down relative to GDP in the UK? Because it did come back down over the course of the next sort of 20 odd years after those 3 big wars finished. How did they do it? Well, they didn't default. It wasn't largely because of inflation. It was because the government then slightly increased tax rates and there was an economic recovery. And, 20 odd years of steady economic growth with slightly higher tax rates was enough on those previous 3 occasions to actually control the debt and bring it back down. So the optimistic view is, well, we've just gone through that kind of thing again, only it's not as bad as those previous periods because the debt hasn't gone up as much. So, as long as we've got 20 years before we get the next big shock like this, it'll be okay. And that is what the bond market is absolutely expecting. Otherwise, you could not begin to explain why people are prepared to buy UK government debt at very high prices. They must believe that the UK can handle this stock of debt. They won't inflate it away and they won't default. Otherwise, why on earth would you buy UK government bonds, which give you -3% real return for the next 10 years? You must be mad unless you believe the UK government can do this. So the market is being really optimistic about this. And there are historical reasons for being moderately optimistic.
Well, that's a nice optimistic tone to stop on. That was really good. And, you know, as an economist, to get you on a upbeat moment is pretty tricky, but that's great. So I want to thank everyone for all your questions. It's been absolutely brilliant. I'm sorry weren't able to get to all the questions, but we did the best we could, and hopefully you found that interesting. Thank you very much for participating, for sharing your questions. There will be I understand there'll be a video of this that will be made available. So if anyone had to leave, or if you want to review some of it, that'll be made available. And other than that, I wanted to thank David for all your points and an interesting conversation. And thank you all for being here. And I think, Erin, would you like to do close up?
Yeah, I'm just gonna thank you, Nelson, so much. And I just really want to say a really big thank you to both David and Nelson for being here tonight, for sharing their time and their expertise, and also a big thank you to Dean Beloso for being here and giving us such a wonderful welcome. We really do want to bring you more of these relevant remote events. So if you do have any suggestions for topics or from our faculty that you'd like to hear from, please do get in touch with us and let us know. We hope to see you soon, but in the meantime, this is one of the best ways we can stay connected and up to date on everything that's not only happening at the college and the business school, but also happening in our wider world. So thank you. Lastly, I really do want to thank my team, and particularly Hazel, Morgan, for all their hard work and adapting just so quickly to this new style of working and hosting events. There's so much going on in the background, and they've just been fabulous throughout this entire time. So thank you very much to everyone.